Yo guys, welcome to the new video. In this video, I will exactly explain how I took the buy in GU this week using the liquidity inducement theorem. First thing first, we should draw the liquidity lines. These are the liquidity lines. Every high and low in the market have some liquidity. This is the daily time frame. We should understand the higher time frame liquidity first. Then the second thing is we should understand what is the newest sweep happened. The newest sweep is this. This liquidity got taken out, so we should look for the price to hunt this liquidity before going down. So our narrative is bullish in the higher time frame. Our narrative is bullish because the last higher time frame sweep is bullish, right? So when we go to the 15 minutes time frame, this is where the market took the liquidity. So if we use the objective of the retail people have buy stops here. The retail people have sell stops here, and their stop losses will be at this high. Their stop losses will be at this high. So they will trade like this. Their stop losses will be at the nearest higher low at the support or resistance level. They will trade like this. Many people will trade like this. So objectively, the retailer stop losses will be here. Here are the retailer stop losses. So let's use the color blue for the retailer stop losses. Now the market should reach this level in order to continue the sells in the market, and there is a breaker block here. In order to continue the sell, the market should take this liquidity and continue the downwards. So here, until this liquidity is taken out, we should not look for the sells because there is no point. The daily time frame is telling bullish, right? This happened in the daily time frame, so we should not look for the sells at this liquidity. We should only look for the sells once this liquidity is taken out. Until then, no sells. Let's play the price. See, when coming into this day, we should mark the liquidities again. This is one liquidity, right? This is the previous day's internal liquidity. If you see here, the daily liquidity and the same day's liquidity are aligning each other. So what it suggests, the higher time frame is aligning with the lower time frame. So it is a very high probable entry. Very high probable entry. So let's wait for the sweep and look for the buys. For the entries, I use 1 minute and I monitor the retail people getting trapped. I monitor how retail people are getting trapped in the marketplace. Then I will enter the market. I can see here the retail people are getting trapped again. Before a huge move happened in the market, there will be always retail people get trapped in the market. Always retail people will trap. See the buying pressure is coming, right? The buying pressure is coming. It is just for the inducement of the retail traders. Now see, after this bearish candle, the retail people will trade like this. They will do like this. See, huge candles, and the build-up got taken out. So there is no point for the price to stay here. The liquidity got grabbed. Now the price will reverse. We wait for the another candle for the entry. Still there is no candle. Yeah, this is our entry. This is the retailer's entry. They got stopped out. Stop loss makes sense. The objective target is this liquidity because this is the same day high. The objective target is this liquidity. That's it. This is the simple trade, and I check with my divergence indicator whether the sweep is intentional or not. See, if you see here, this low is taken out by this low, but in my indicator it was not taken out. The indicator will suggest that real price nature. See, let's play the price again. You can use scale in here. Scale. This is the liquidity that was taken out. Retailers build up, got taken out. Sweep, engulfing. You can scale it here like this. There are a lot of ways to enter the market if your direction is correct. There are a lot of ways to enter the market. Or this is scaling, right? You can just target this liquidity. There are many ways. TP hit. This trade got TP hit. Many ways to trade the market. Hope you like this video and understand the concepts I preach. This is how I trade the markets from the liquidity point to the liquidity point. And in the high time frame, if you see, I will only look for the sells if this liquidity got taken out. I won't look for the sells if this liquidity won't take taken out. I won't sell the market like this. That's it. Peace, guys. If you want to join my one-on-one mentorship, please go to the comment section.